we're going to talk about some of the standard policy provisions adopted by the National Association of Insurance Commissioners. Now, this is going to be a series of videos here, but I'm going to give them to you a few at a time so that you don't have to like watch a hour-long video just to learn them all. So the first one that we're going to go over is the entire contract. So the entire contract in an insurance policy includes the policy itself, a copy of the application, and any riders and amendments or endorsements. Okay, so it's the actual policy that says, hey, like this is what you have, and then the application that was submitted to the carrier. So that's included in the final policy as well. Okay, and then also any riders. So a rider is something that's added to a policy. So say you get like a whole life policy, and then some whole life policies have the option to add a term to it, almost like a little bonus, an accessory, right? You can add that. Some have riders where they'll help cover like nursing homes. If you go to a nursing home, you can take some of the death benefit to help cover that. They'll advance it to you ahead of time. So a rider is like an attachment to a policy, and an amendment or an endorsement. It could be a change that's needed or some sort of authorization that's needed on the policy after it's applied for. For instance, say you apply for like one rate and then you get rated down to another rate, then you have to have an amendment or an endorsement to make that change and authorize that change on that policy. So that's all included in this as a part of the standard policy provisions per se. There's no like nationally adopted like rule like you have to have all these, but this is just the standard that's followed. These are a few of the things. Now, the next one is the insuring clause. So the insuring clause says that like it gives a basic agreement between the insurance company and the person who is buying the insurance, the insured. Okay, and it just says that the insurance company will pay the claim if the insured dies, as long as they've made their premium payment. So some things that are included. This is usually on the face of the like on the cover on the first front face page of the policy when it comes in the mail or when it's delivered. We mail ours because we sell all our insurance over the phone here at Senior Life Services. Oh, by the way, my agency, we sell 100% over the phone from home life insurance. So after you get in, if you'd like to learn, after you get in the business, if you'd like to learn how to sell insurance from home without having to drive around and go to appointments face to face, then just reach out to me. And also my company provides leads to all of our clients, our agents at no cost. So we provide the pipeline of clients so you don't have to like hit up your family and friends or buy leads or all that stuff. But anyways, the insuring clause, it says the premium of how much the insured has to pay, the death benefit. It has the duration of the policy and like what type of policy it is, if it's a whole life or a term policy or anything like that. And then it also says the parties of the contract. So maybe the beneficiaries, the insured, the owner, if it's different from the insured, the insurance carrier. Now we also have a free look period. So a free look period is a time, it's exactly what it is, a free look period. So it gives the insured a free look at their policy. It's like a refund period, right? It's like a refund policy, essentially. So it's like you buy a shirt and you get, 15 days to return it with the receipt for your cash back, and after that, you're stuck with it. So with the insurance policy, in the state of Florida, it's a 14-day law. So they have 14 days to look at it once they receive the policy, not when it's issued. Okay, so the insurance company may issue the policy, then it takes a few days to get to the insured, and the insured gets it. At that point in the state of Florida, they have 14 days to review it. Now, every state's different. Some go to 10 days, some all the way up to 30 days. Insurance companies have their own policy with this stuff too. Like a lot of the carriers that we sell here, they have up to 30 days of a free look period. So even though the state that I live in has a 14-day free look period where the insured has 14 days to make any changes to the policy or request a full refund of their first payment if they made it with the application, our carriers that we sell give them 30 days. So that's usually on the right in the beginning of the policy as well. It states that. So what we just covered here is the entire contract, which once again includes the application, the policy itself, and any riders and amendments and endorsements. Okay, and none of those things can be changed once the policy is in effect without both parties agreeing to the change. So none of the things in the entire contract can be changed once it's solidified and set in stone. Okay. And then we had the insuring clause, which is just like the basic agreement between the insurance company and the insured saying, hey, if you die, we're going to pay the claim. And this is what your premium is, the death benefit. This is who's involved in the policy and stuff like that. And then we have the free look period, which is essentially the refund period for the life insurance policy. So if you found this content valuable, please like and comment on it, subscribe to my channel, turn on post notifications, and also share this with your friends who may be studying for the license course as well. And look, if you decide that you want to take a look at what we have to offer for insurance sales too, then reach out and I'll be more than happy to go over our program with you. I hope I help you pass your life insurance licensing exam course with this content. Thank you.